This news is likely to take a lot of investors by surprise. It sure surprised me. Tesla has just launched an updated Model Y at Giga Shanghai. Ambient lighting, new textile dashboard material, no more wood, black 19-inch Gemini wheels, previously was silver, and get this, they did not change the price. This is quite the update, not enough maybe to call it a refreshed model, but this should drive even more attention to the most popular vehicle in 2023, the Model Y. Ladies and gentlemen, we have so much to get into here in this video. We have all of your Tesla stock news to go over. We also have a lot of economic data coming out this week, and the importance of this could not be more relevant for Tesla stock. So we're going to get into that, as well as option flows, short positions on Tesla, and we're going to take a look at the charts. So if you guys are ready, let's go ahead and get into it. Hit the like button and subscribe to the channel if you are an investor in Tesla stock or soon to be buying more shares in Tesla. This also catches me by surprise. This article from Teslarati says Tesla is delivering cars with FSD installed. No update is required. On Saturday, Holmar's catalog, or Holmar's blog, posted that Tesla was delivering cars with the FSD beta installed, quote, out of the box, meaning that buyers of the software would no longer need to wait to download an update after purchasing the add-on. Instead, users who purchase FSD or transfer it from a different vehicle will see it effectively switched on without having to wait. In Denmark, they sure do love Teslas, and it's Teslas on Teslas on Teslas as far as you can see. Now, just briefly back to this new updated Model Y, I want to point out the ambient lighting, which is in the refreshed Model 3 Highland, which is launching hopefully here in the US pretty soon. This lighting should add a lot more potential customers to buy themselves a Tesla. This feature in and of itself, I think, is one of the easiest features for Tesla to install. Should not affect margins basically at all. What does this ambient light strip cost? Like $10, $15? Maybe a little more, maybe a little less. But it could drive a much higher conversion rate due to the appealability of just having a light bar in your car. A lot of people tend to like that. So I think this is a great move by Tesla, and something, again, not a lot of investors thought was even going to happen until 2024 or 2025. Tesla has increased the APR percentage for financing in the US for an excellent credit rating. A 72-month loan went from 6.34%, now at 6.49%, and for an 84-month loan, this went from 7.32% to 7.36%. Here are pictures of the new 19-inch rims, and the black rims are definitely more appealing in my personal opinion. I think it's just a really good move by Tesla. There are now 244 homes in Tesla's San Diego virtual power plant. This was just opened about 2 weeks ago, so there's quite a few homes that are joining in on the grid. Here you can see a Cybertruck spotted charging at a supercharger next to a Model S and Rivian R1S. Take a look at the combo here. Sawyer Merritt would like to remind you that it's officially Q4, which means Cybertruck deliveries begin this quarter. The pickup truck industry is about to change forever. David Underkoffler, Autolist editor-in-chief, says the refreshed Model 3 could be bigger for the company than the Cybertruck, and this really stands out to me. He says, quote, I would be very surprised if the actual Cybertruck hit the road in the next year to 18 months and it had a starting price of anything lower than $60,000. Now, a lot of people are expecting the lowest end of the Cybertruck is going to be priced right about $59,000. Some people think $49,000, some people think $59,000, but a lot of people are not expecting a year to 18 months to get the $60,000 version of the Cybertruck on the roads. I don't think that is really likely. Of course, Tesla and other automakers, they like to start with the most expensive models first and then get down to the lower tier models. But I just don't think it's going to be a year or 18 months until the lowest end variant of the Cybertruck starts to hit the roads. He does go on to say, I think the bigger news for Tesla is that they do have and have already shown a revised Model 3. There's a revised Model Y expected, potentially brings the price down with different battery technology. It's a facelift. It looks different. We haven't seen these two vehicles get updated really since they were introduced, so I think that actually has more potential to generate interest and sort of boost sales again for Tesla. Gary Black posted on Twitter, in which I reposted. If you guys are not following me over there, it's Michael Tyler. Go ahead and give us a follow. He says IR compiled Q3 consensus is for 455,000 deliveries. This compares to Bloomberg's Q3 consensus of 457,000. My Q3 estimate is 445,000. We continue to expect investors to overlook any reasonable miss, 445,000 to 455,000, given the well-documented M3 Highland transition likely costed about 15 to 20,000 deliveries, and downtime for the factory upgrades will likely cost 10,000. Tesla likely to release Q3 delivery numbers before market open on Monday, October 2nd. So we are expecting the delivery number to come out tomorrow morning before the bell. Around 8:30 in the morning is the expected time. I'm going to make a video that comes out at 9 p.m. tonight to go over exactly what my estimates are, again, what Wall Street's estimates are, and how potentially Tesla could achieve much better deliveries than expectations. And I think this concept really deserves its own video to get into. So we're going to break that down and exactly what kind of effect this could have on Tesla stock. So be ready for that video at 9 p.m. Eastern Standard Time, 6 p.m. Pacific Time, sharp. This could also lead to quite the rally in Tesla stock. As you can see down here on the right-hand side of your screen, I just noticed this, the Model Y is now trending on X. The U.S. is weighing a record $1 billion loan for a massive lithium mine in Nevada. Thacker Pass was opposed by environmental and tribal groups. Loan would represent roughly half the cost of the mining project. Unfortunately, the U.S. wants to transition to electric vehicles, but here domestically, we don't have any lithium mines that are really able to produce even close to the amount of lithium that we need. I believe there's only like 2 mines that are operational. Tesla has been trying to get a lithium mine approved for almost 2 years now, and they still have not been able to do so. A lot of this, like it says, does come down to local concerns about the environment and the effects on the environment, and a lot of people object to this. They don't want to be next door to a lithium mine, understandable, but something's got to give. So this could be really, really good news. Canada's largest Tesla supercharger is now open in Richmond, British Columbia. The Peterson Museum is auctioning off a low-VIN 2024 Tesla Cybertruck during their 29th annual gala on October 7th. The event will be hosted by Jay Leno. Gala tickets start at $1,750 and go up to $30,000 for a premier table. Quote, be one of the first to own a Cybertruck, and Sawyer Mayer believes this could go for as high as $400,000 or more for this low-VIN Cybertruck. Tesla's option activity last week was 62% positive for the entire week. You had 5,248 orders totaling $6.58 billion. Tesla's by far the most active single stock when it comes to options. Now, on Friday, you've seen above trend activity, 881 orders totaling $885.49 million with a positive order value of 63%. This is very important to point out. Friday was the last day of Q3. That means your fiscal year 2024 for most hedge funds and institutions starts on October 1st. So the selling that you theoretically see out there in the markets really tends to happen and come to an extreme last Friday. Because if you want to book profits for 2023, you have to sell by last Friday, or for your fiscal year 2023. So from here on out, the markets could be a little bit more bullish. Obviously, we're prone to economic data that comes out and the developing narrative behind a recession, a soft landing, higher rates for longer, that whole situation. But what we have seen with Tesla's option activity, Tesla's charts, looks very encouraging for 2024. As we do enter into fiscal year 2024, Tesla is still by far the most shorted stock on the markets today, with 20.33 billion worth of short positions. For context, if you look at something like an Apple, the most valuable company listed on our markets, you will find a short position of about 18.36 billion. This is actually up a lot as of recently due to Apple's troubles. But for context here, Apple is like 4 times the market cap than Tesla. If you look at Nvidia has 11.12 billion that is currently sold short. If you look at a Microsoft, you will find a similar number, about 12.79 billion. So you can see just to the extreme degree that Tesla is short compared to these other names, and that does make Tesla a little bit more vulnerable for some big upside moves on any good news. Now, we do have some important economic data coming out this week. Starting off on Monday is ISM Manufacturing PMI. You're expecting that at 47.7, so an improvement from last month's number of 47.6. A slight improvement, but an improvement at that. Fed Jerome Powell will be giving a speech at 11 o'clock in the morning tomorrow. At the same time, Fed Harker will be giving you a speech. At 1 p.m., Fed Barr will speak, and at 1:30 p.m., Fed Williams will speak, and then at 7:30 p.m., Eastern Standard Time for all of these speakers, Fed Mester will also be speaking. Now, before we get further into the economic calendar, number one, you guys can pull this up for yourselves. I highly recommend you do, because there's different events that can move the markets happening at various different times throughout this week and any other week. But why is the economic data so important? Let's just acknowledge that for a second. The Fed basically confirmed last week, even if inflation comes down to 2%, we need to see a weakening in the economy. Now, a little bit of weakening in the economy could be a good thing, because maybe that means the Fed's not going to raise rates anymore. Maybe that means the Fed is going to cut rates a little bit sooner. But too much weakening in the economy, well, that's where you get into a Fed-induced recession, and that is what nobody wants to see. So that's why the economic data is going to be so important for the markets, as well as any change of kind of tone, change of narrative from any of these Fed speakers. If the Fed wants to change your opinion, they do so by these speeches they give. They kind of mold market expectations. So if we get the same old, higher for longer, things of that nature, you're good, you're fine. But if the Fed starts to come out, any of them, and says, hey, we might need 6% interest rates or 7% interest rates, that's a change, and that's what the markets would react to. So any change is really what you want to be watching this week with any of the Fed speakers. On Tuesday, we are going to get JOLTS job openings. Recently, the job openings have fallen quite a bit from over 10 million. Now, as of last month, at 8.82 million, you're actually expecting a slight increase to 8.83 million, and some people are forecasting as high as 8.6 million, or that would actually be a fall, of 8.6 million. So the estimates are kind of all over the place, but job openings decreasing can take some of that pressure off of the labor market, and that's something the Fed has been very clear about. You don't necessarily have to see your unemployment rate rise. If the job openings were to come back down to pre-pandemic levels, that might be enough for the Fed to kind of slow down and be a little bit more on the dovish side. Now, also Wednesday at 10 o'clock in the morning, you're going to get ISM Services PMI. This number is expected at 53.6. Last month's reading was 54.5. So once you go under 50, if that happens, that is contractionary. You want to see services become contractionary. You almost need to see that right now, at least for the purpose of the Fed. You're also going to get ISM service business activity, ISM services new orders, services prices, a bunch of other secondary data points when it comes down to the ISM services, which will be important, obviously, because the service sector of the inflation report is by far the most important for the Fed right now. It's really the last area to go. That and housing are really important areas. Now, on Thursday, not much for economic data. You are going to get initial jobless claims coming out for the week of September 30th. You're expecting a little bit of an increase, about 6,000 from last week's number. And I'm a little confused because you would think the UAW strikes would be having an effect on initial jobless claims so far, but it does not look like they are. Friday is going to be your big day as far as economic data. You are going to get the non-farm payroll report. You're expecting 163,000 job ads, but you also want to watch the revisions as well, because you've been getting some real revisions here, like big revisions down. You could see back in June, after being revised 3 times now, you have only seen 105,000 job ads. Then 157,000 in July and 187,000 in August. So we'll see what happens. These numbers could get revised down lower, and that just makes you question the government's report anyways. But the markets will pay attention to it, as well as that the unemployment rate, you're expecting that at 3.7%. Last month's rating was 3.8%. So you're actually expecting the unemployment rate is going to come down a little bit, and that will be on Friday. You're also going to get weekly average hourly earnings. You're going to get government payrolls, manufacturing payrolls, average weekly hours, all kinds of different data points. The U6 unemployment rate, this is an interesting one to watch as well. Go ahead and click on it. It says this includes people who want to work but have given up searching, and those working part-time because they cannot find full-time employment. This just rose to 7.1%. So if the Fed was looking at this in particular, then they would say, hey, maybe the labor market is not as hot as we thought. Maybe there is some serious weakening happening in the labor market. Some news that also came out recently is that Ford is warning that extended UAW strikes could result in up to 500,000 supplier employee layoffs. This is something that we know is coming, and it has been happening. It starts slow, and then it does start to go pretty quickly. And as the GM CEO did say, for every one UAW job, there's about 6 other jobs that depend on that one union job. A lot of this is supplier related, dealership related, things of that nature. So the longer this strike goes, the worse on the economy it's going to be. But the worse on Ford and GM and Stellantis it is going to be. And as of right now, there is no agreement by any of these 3. Now, I continue to remain really resolute in what I'm about to say next. You want to watch the economic data. Any weakening here, any bad signs of maybe consumer spending, because the expectations for GDP for Q3 are 3%. If you start to get bad data, these estimates could come down, and that will not be great short term for the markets. The next GDP report for Q3 is expected on October 26th. So really in the next couple of weeks or so, estimates, I don't think they go higher. I think they could go lower heading into that, and that could be negative for the markets. You also want to be watching bond yields. Recently, bond yields on the 2 and the 10-year Treasury, really your whole yield curve in general, has come down off of the highs, but you're still sitting at, decade highs here. Bond yields have come down a little bit, but they really have not done much. So the 2-year Treasury currently sits at 5.05%. The 10-year Treasury sits at 4.57%. What you have seen recently is the yield curve has been uninverting. So what you can see right now is the 10 and the 2-year yield curve is currently inverted about 44 basis points. This is really steepening a lot recently. Back here in June, you were inverted 1.06%. You have uninverted almost half of the total inversion. This happens typically right before a recession. And what you could see, it's pretty clear. When you start to uninvert, you're pretty soon thereafter going into a recession, sometimes just a month or two before you enter an official recession. Same is true for the 10-year and the 3-month yield curve inversion. This one is my personal favorite because, I mean, why should you ever get paid out more for owning a 3-month bond than a 10-year bond? It's really dramatic and drastic. And this one has really been uninverting recently. You were inverted 1.88% back here in May of 2023. Now you're only inverted 0.96%. So same thing here. When you get that uninversion that starts, it typically can go pretty quick, and usually that is right before you're in a recession. So you want to watch this. You also want to watch oil. Oil is something that is very important right now. Again, ever since 1945, any recession you have seen has had a spike in oil. So maybe this is the spike in oil. You're up like 40% from $67 a barrel you've seen back here in July. Now you're sitting at about $91 a barrel. So if this continues higher, that's not good for inflation. That's not good for just the historical kind of recession indicator if you continue to spike. Now, something else you want to be watching as well pretty dang closely is the dollar. So the dollar, best way to think about this is like a Tesla, right? That does business in China, that takes in foreign currencies, or does business in Europe and takes in foreign currencies, but reports earnings in US dollars. Well, as the dollar goes higher, that foreign currency, when you take it in, converts to less US dollars. So you could have the same number of sales, same number of everything as maybe you did last quarter, but if the dollar is 20% higher, that's going to mean a lot less to your actual bottom line because your conversion ratio is really high. Now, this is the chart of 2022. Right here where my cursor is where you started 2022. What happened? Well, back here in February, the dollar started to increase, and it continued to increase. Most of this has to do with Fed policy, as you can see back in 2021. Company earnings were really helped out by a weak dollar. And then once the Fed got more hawkish, the dollar just continued to rise. And I would argue this is even more important than bond yields because it does have a direct effect now to company earnings. So you want to watch the dollar very closely. And coincidentally, ever since July, really once you hit the low, the dollar has started to rise. And once you got, to about August, mid-August, the dollar really started to take out, and you are at the highest level now that you have seen since November of 2022. If this continues higher, that could put more downside pressure on stocks. So that is going to do it for this video. You guys need to be watching the channel for that video coming out at 9 p.m. tonight. We are going to be going over, again, what I expect deliveries will come out as, how this could positively or negatively impact Tesla stock, how a good delivery number could really cause Tesla to rally potentially into the $300+ range. I think that's something you guys really need to hear. We're going to be giving a full in-depth breakdown on the technicals and everything you need to know about tomorrow. So stay tuned to the channel for that one. Hit the like button and subscribe to the channel in the meantime if you made it to the end of this video. If you also made it to the end of this video, you want to take it a step further, come join the trading community or just support the channel. Link down below in the description of this video. For the Patreon, I do send out notifications every time I make trades. Come hedge out your portfolio. Come make some YOLOs if that's what you feel like doing. A little bit of both, going long, going short, doing whatever we're doing over there on a day-by-day basis. You are welcome with open arms, so come join us. Again, link down below in the description of this video. You guys have a great rest of your day. My name is Michael Tyler, and I will see you in the next one.